All right, by now, everyone, you know that Jerome Powell and the media has broadly marketed the fact that the Fed raised rates, and Jerome Powell continues from the Federal Reserve after 4 rate hikes. That's 1 full percentage point in a Fed funds rate increase. Really deflated expectations, and to counterbalance or counter effect the fact that if monetary policy is, we're seeing an increase in Fed funds rate, a higher cost of borrowing money, that is. If we see the Federal Reserve curtailing their balance sheet, meaning liquidating bonds, that's another form of tightening. That's a double kind of whammy. But the real essence of why the market was disappointed with this is they know that because this January, with a new Democrat-controlled Congress, they are not going to bargain, most likely. 98.57% will not, repeat, not bargain with the Republicans and passing any type of legislation that would make the Republicans look good. And that, I think, is what the unknown statement, what no one's saying, because no one wants to say it. That's a very unpopular thing to say, but that is the fact. There's a very low chance of any type of legislation to pass that will implement fiscal policy changes, and that's how our world works. Fiscal policy changes, tax cuts, bills to pass that enable commerce to move on, so to speak, to expand gross domestic product, GDP, and as well as monetary policy to incite people to do something like borrow money, buy a home, etc., with cheaper credit. So with that said, what happened yesterday? This is our algo optimized page. These are the 5 new strategies that we laid out for people in both the S&Ps and as well as SSO. So this is the S&P Spider. This is SSO. This is the BXX, the volatility. This is Apple. And this is the Euro currency futures. These are 5 very formidable trading strategies that we laid out, one of which I put out and shared with you guys a short position that had covered before ahead of the Fed announcement. It actually, after it covered and I sent that tweet, it actually took a long, and what did it do? It got out of the long. You can see there's the long, and immediately reversed and went short, and is still currently in an open trade short position. So I just wanted to make sure that I provided that detailed analysis. That's on the SSO. This is the S&P. Now this model here, let's take a look. Same thing, covered the short right there. The short from here, blue line represents a profitable trade, red line, loser. Here's a loser right there. Gets long, gets stopped out, gets long again, bang. Now, looking at this market, you'll notice that it did go long and it immediately reflected to get out and went short. So it went sell and it's short 389 shares. It's still short. This is the intended profit. Once an intended profit, that blue line is hit, it puts in a stop to protect profits so it can't turn winners into losers. So that's the base model that we sent out. This is the equity curve or year-to-date performance. And so let's take a look at some of the, if you care, we'll take a look at some of the parameters in here. Now, once again, I just wanted to point out this is for this year. Now, here's the problem, and I know a lot of guys will sit there and say, "Hey, yeah, but John, this isn't a curve fit model. What this is year-to-date performance on signals. This is all I'm talking about. And in this environment, now, if you develop a strategy based on a market condition in 1987 of October, in those 30 days when the market was crashing, that system won't work often because we don't go through those types of insane periods of volatility. This year, this is the model that has worked from year-to-date perspective. You'll notice that we need to, and that's one of the things about trading systems or models, they need to be maintained for changes in A, volatility, B, that volatility also dictates profit targets as well as risk factors. And so that's why systems need to be maintained. And I would imagine that in the next quarter, these systems will be still valid to use without maintenance, as long as we stay within this type of volatility, especially as we're at around a 65 or 66 ATR using a 10-day average of Wells Wilder's tool, average true range. Now, what I wanted to point out is look at the profit factor that in the market, which is ironic because this year we've had a almost up until the last 8 weeks a bull market in equities, but the profit factor is over 3 on the short side of the market. The profit factor is 1.69, so an average profit factor taking longs and short of 215. You could see that over 50% of longs and shorts are profitable. This is not an inactive system. This is 127 trades, and you can see it's taken actually more longs than shorts, so not too bad of a system. What about drawdown factor? And as you can see, return on capital. Let's talk about return on capital. 37% versus buy and hold return of a loss of 8%. That sucks, right? So as far as a market is concerned, what I kind of feel that this is a valid strategy for those to use, looking at your max drawdown and looking at what this shares with us is no system is infallible, and that we need to utilize these as trade signals and then maybe use them for confirmation. So what does that mean? Well, it's a nice equity curve, as you can see, based on based on a $100,000 account. I mean, that's not bad if you took every single trade, right? But so let's take a look. Would you be taking shorts ahead of after the election or going long into the election? Well, there's a lot of different trades here that may not have taken place, but at the very least, when you get a signal and you have a profit target, would you be able to utilize that in taking options, knowing what your average holding period is, right? If your average holding period is maybe 3 days, you could trade weekly options using these strategies, knowing that with yesterday's volatility, what the projected profit target is. That's what these blue lines are all about. You know, when you get near the profit target, do you let the trade run like we did here? It runs. It just says this is the intended profit, but this has a trailing stop function. You can see, why did it get out and not continue up? Because it got stopped out on a pullback. It says we don't let this thing turn winners into losers kind of situation. Anyway, that was one of the points that I wanted to make with the Person Algo Optimizer. It allows individuals to maintain this system with the right training of how you can get the most out of the trades. Look at the euro currency here, which is really not bad system. And again, it's a 60-minute. It doesn't trade actively. This is kind of a really, I would have to say, all or none type trending market condition. Very rough conditions. What do I mean by all or none? 2 hours the market moves and then it does nothing for a couple days, right? And then it just chops around. And that's where I think it's just been one move, nothing happens. Then it gradually moves. And then 3 bars, the market goes up. 1 bar down, 3 bars up. I mean, this is just really a lot of, unless you're there at that one particular second. Now, this system does not trade 24 hours a day. It only takes select trades, and that's why it has a pretty decent rate of return. And that's why we gave this out to our clients, these particular models, so that they can build on them over time with the Person Algo Optimizer. But I also thought it would be nice to not only share with you what we've done, how we do this, but also where investors can utilize this information in an algo-controlled world, especially with this type of program. And it's amazing how it can help investors make better trade decisions and say, listen, you know what? Maybe I won't get long ahead of the Fed, but boy, by gosh, if the system says to go short and it is short, maybe I shouldn't buy until it covers the short and I have better, clearer signals. And that's what we have right now. No bottom in sight, once again, for the equity markets. Both models on the SPY and SSO still short now. And, of course, they do have a trailing stop function kicked in to protect the short profit. I'll let you know when things change. I said I would put a video together. Here's that video. And I hope this information helped you and also explains what is the Algo Optimizer doing and how is it performing in an active markets environment. And here's it's happening right before our eyes. Thank you all for watching, and I want to wish everyone a Merry Christmas out there. We'll put out some more market analysis as warranted throughout the holiday. Thank you.